Hey guys, it's a Dividend guy coming at you with a Robinhood portfolio update. Happy Monday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So today we're going to go over the overall portfolio performance, the individual metrics on how we're doing, look at our buying power, how the individual stocks are performing, and looking at if there are any deals. Even though we are up compared to where we were at last week, there could still be some really good deals below my average cost. I want to make sure I highlight those because I get paid on Friday, so I could be putting money into the stocks or I will be putting money into stocks that are a deal. So we're going to look and see what deals we have within the portfolio. Also, we're going to look and compare it to Berkshire, the NASDAQ, the Dow Jones, and the S&P to finish out the video. So for today, we are up around $390, up about 1%. The 1 week mark, we are up $344, up around 0.9%. For the month, I'm not surprised you're going to see red for a while here on this metric. We are down $2,200, down 5.3%, which is good. That means that there was buying opportunities. And with that, I did scoop up shares of Allstate. I scooped up shares of Prudential, Travelers, and Travelers as well. So I did take a little bit of advantage of that big dip, but not as much as I wish I could have. But that's okay. We were down, we took advantage of the dip, and that's exactly what we want to do. 3 month mark, we've actually recovered a bit. So we are up around $540, up 1.4% for the 3 month mark. For the year, we are up $8,200, up 26.4%. And then all time, we are up $8,400, up 27.36% since April 13th of 2018. We have a buying power of 89.73. That will be going up because we will be getting dividends from our companies, from the stocks we hold, as well as the money that I put in when I get paid Friday. So jumping right into the portfolio here, we've got Realty Income, my favorite REIT, pays me monthly, sitting at $66.24. 120 shares, around $8,000 worth of market value. They are down about 21 cents today. Average cost is $67.02, so this is a buying opportunity for Realty Income. Around 20.3% of the portfolio is in Realty Income. Today we're down $25. Total we are down $92. And they have not announced the dividend yet, but they'll be paying it on the 15th. This one's one of those steady Eddie. I know when they're paying. So guys, I also want to highlight because the deal with VREIT will be closing. I called the company and they said that they wanted to get it through in October, but they'd be happy with that, but they were more looking towards a November closing, which is cool because it's my birthday's in November. So but what we will be getting from this deal is VREIT is giving us all of their properties, right? So we're essentially buying them out of stock. So all the VREIT shareholders will now be Realty Income shareholders, and most of the tenant base that VREIT actually owns is already companies that we own as Realty Income shareholders that we're already generating rent from. Stocks like Walgreens, CVS, there's some Kroger and PetSmart in there as well. So we got groceries, we have pharmacies, a little bit of retail. So there's a lot of really good synergy between the two companies, as well as a little bit of diversification. Now, the thing that I also want to point out is the office properties. So, guys, we're getting a lot of the same tenants, but the thing that they want to do is they want to get rid of all the office properties because a lot of VREIT is actually office space, and Realty Income does have a very small portion of their assets in office space as well. So what they're going to do is we're going to get all of these great companies that most of them we already own, but we're going to take out like the least important of the dividend generating or the passive income generating properties, which is office space. But the thing is, we're not losing those. Technically, all that's happening is they're saying, you know what, this is the least profitable part of this business. We're going to spin off these office properties and make it a completely new entity, a completely new business and company, but Realty Income shareholders are still going to get that. So technically, out of this merger, we're not losing a damn thing. There has not been an announcement that the dividend will be decreased, so I don't think that's happening. They're getting more of the same good properties, as well as we're not losing the least important properties. We're actually getting a completely new company, and that's it. That's going to be structured like a REIT, just like Realty Income. So we actually should be getting more dividend from the same company. So Realty Income hasn't announced a dividend cut, but I do know that REITs are legally obligated in the way that they are allowed to be structured. They have to pay out 90% of their earnings. So with these office properties, we're going to get rent from them still. So we're going to get a dividend. I don't know what that is yet, but I do know we will be getting one. So we're going to get the dividend from the office properties on top of Realty Income's already growing dividend with the properties that they have. Now, there's been a lot of speculation on what the VREIT properties that we're adding are going to be doing for the Realty Income portfolio. We could see just the steady eddy that we've been getting, like a half a percent or whatever it was last quarter. The dividend increases have been very steady for the past 25 years, but now that we have more properties, people are also saying they could ramp up the dividend growth. So we'll see. I'm super excited about that merger, and I'm happy to see it close. And when it does, I'll make sure that I talk to you guys a bit about it. But I just wanted to touch on it because I think that is going to bring Realty Income stock down. So generally what happens when you have a merger, so like let's say when I bought AbbVie a couple years back, they were buying Allergan. So AbbVie stock tanked. It went down to like 70 something or 69 at the lowest, and the company that was being bought went up. So technically what happens is the company that the parent company that's doing the merger drops. And so we could be seeing a little bit of that. And people could be nervous about the dividend as well. I mean, a lot of times when a merger happens, it does mess with the metrics of the current company a bit, and people could be worried that we're going to see a dividend cut. We're not going to see a dividend cut from Realty Income, but just that uncertainty could cause some people, or even Mr. Market, like just the masses, to rethink their Realty Income investment, which I hope they do. Hope they sell out like crazy so I can buy this quality company at a discount. Which, speaking of, guys, right now it is a buy for me at 67.02. Usually this has been sitting around $70 a share, so it is nice. See, like 67 to like $69 a share. So it's nice to see it come down. So I could be buying a couple of shares of Realty Income this week. We'll see though. Then we've got Coca-Cola, my personal favorite stock. 65 shares, around $3,500 worth of market value. Average cost is $54.56, so a buy is, it's definitely a buy for me right now. And it is around 9% of the portfolio, down 260 today, down 46.22, 1.3% total. And a dividend coming in of $27.30. So love Coca-Cola stock. Currently, both Realty Income and Coca-Cola are buys for me right now. Let's see how many more companies are buys within the portfolio. Next, we've got Altria sitting at around $49 a share. Shares, I have 175 for the share count, $8,500 worth of market value. Average cost is $47.83. 22% of the portfolio is in Altria, up $77 today, up $186 total, up 2.2%. Dividend coming in on the 12th of $157.50 for my 175 shares. So currently, Altria is not a buy for me, but that's okay. I'll sit on the sidelines. I'll redeploy that cash to the next month. So with the Altria dividend, I won't be getting paid from Allstate this month. So with the Altria dividend plus the Realty Income dividend is around $28. So that would put us at like 180, or and then plus Coca-Cola is about 200. I'm going to be putting a little over this, like it's like 212, I believe. Plus I'm going to be putting in $300 towards the market, so I'll have over $500 to play with in the market, and I'll be buying companies for the next set of months. So then we've got Allstate sitting at 130. My average cost is 128, so I will be sitting on the sidelines for a while, but that's okay. Only have one share, 130.96 for market value. Average cost is 128, so $128 even. 0.33% of the portfolio is in Allstate. That will be going way up. Love, 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 love insurance. Can't get enough of it. Today we're at 44 cents. Total we're up nearly $3, up to 3.3%. Love Allstate. Happy to have it back. Then we've got AbbVie. 75 shares, about $8,100 worth of market value. Average cost is $81.20. 20.64% of the portfolio is in AbbVie. Today we're up 56 cents, $56, and total we're up nearly $2,000, up around 33% on AbbVie stock. So this is the one that I keep, people keep asking me if I'm going to buy. Yes, I would love to buy this stock if my average cost was $100, but it's not. Like I said, I bought this during the Allergen, I'm not sure I've heard it pronounced both ways, acquisition, and it dropped, it just tanked. Look at that, it's down to 70 something, right? Yeah, down 82, 5-year mark. The Allergen acquisition was a couple of years ago. So yeah, see, it got down to 64, and I've just held it since. So it doesn't drop very much, and I purchased 15 shares when I switched out Pfizer. So happy with the company, love the company, and it will be one that I add once it drops to the $90 range. When it does, I assume eventually it will, but I'll be sitting on the sidelines just collecting that $100 worth of passive income. Also, I'm excited because next quarter, or before next year, they usually do the dividend increase near the beginning of the year, and they're a monster dividend increase. They've just done monster dividend increases, so I'm really happy that I increased my share count a bit, because that will reflect on the dividend payment. So I'm sure we'll be over $100 a share with the next dividend payment increase. Then we got P&G sitting pretty, down $1.67 today. Awesome. One share, $141.88 for our market value. Average cost is around $144. 0.36% of the portfolio is in Procter & Gamble. Today we are down $1.70. Total we're down $2, so a buying opportunity in P&G. Clorox is at 164, but it's still down from our average cost. We have one share, $164.95. Total is about $169. 0.42% of the portfolio is in Clorox. Today we are down around 40 cents. Total we're down about $4. And we got Aflac, which they would drop. 115 shares, around $6,200 worth of market value. Average cost is around $50 a share. About 16% of the portfolio is in Aflac. Today we are up $142. Total we're up nearly $500, nearly up 9% on Aflac. Then I switched out Walgreens for Prudential, which we are up big today. 40 shares, $4,300 worth of market value. Average cost is $103.26. Around 11% of the portfolio is in Prudential. Today we're up 150. Total we're up nearly 170. And the reason I switched this out, one, it's insurance, so it's a no-brainer. Love the business model. But Walgreens had a longer track record of increasing dividends, but Prudential had a shorter track record but a more aggressive dividend growth and a lower payout ratio than Walgreens. So the thing is, it had the business model that I look for. It didn't have a dividend growth, but because it's done such an accelerated dividend growth, I'm okay for overlooking that, and the payout ratio is a lot healthier. So the dividend increases are more aggressive, and so they're quicker, and they're at a lower payout ratio. So just going to buy and hold. And the thing is, guys, with this switch, the switch from Walgreens to Prudential actually boosted my dividend income by $6 a month or a quarter. So now every time I get paid, I get $6 more. So that's $24 more dollars a year, and they're set to increase their dividend within the next, I think, 2 quarters. So not only will I be getting a dividend increase usually scheduled for AbbVie next quarter, I also will be getting it from Prudential according to the metrics, or their history. So that'll be really cool because I have 40 shares, and it will be really sweet to see how that increase reflects on the dividend payment. There's nothing wrong with Walgreens, but that's simply the reason why. So 80 shares of Walgreens pays me less than 40 shares of Prudential, and 80 shares of Walgreens only gave me a cent increase. Prudential is known for doing a 5-cent increase. So even though there's less shares overall, I'm getting more money, and the dividends accelerated a lot faster. So I think overall, they will outpace Walgreens when it comes to dividends and the growth of the overall company. So that's why I switched out. Because I love insurance, and I found a company that totally fits the portfolio, and I think fits it better than Walgreens. Then we got Travelers, the last insurance company. One share, $152 or $172. Dang, $157 of market value. Average cost is $151.07, so up a bit. But 0.4% of the portfolios in Travelers. Today we're up 76 cents. Total we're up $6.15, up 4%. I will buy Travelers around 150. Just buy and hold. Love it. So today, for the overall metrics, we are up, what was it? Or for the year, we're up 26.48. So we're going to compare that to the indexes real quick. Berkshire is up 31%, so they're beating us by about 6%. The NASDAQ is up 33, so we're lagging about 6% there. Dow Jones, we are even with. And SPY, I'm sure we're behind a bit, but that's okay. Yep, so everything's about 33%. But to be honest with you guys, the book that I'm reading right now on Warren Buffett, it's called Buffett, The Making of an American Capitalist. He actually went against the Dow Jones, so that's what I'm doing as well. So I'm even with what he considered the benchmark, so that's awesome. With that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, that Dividend Guy, and when you do, hit the bell notification so you don't miss any uploads. Thank you guys so much for watching, and I'll see you guys tomorrow with another Robinhood portfolio update. Take care, guys.